Hello everyone. Welcome to Do Academy. Once upon a time, there was a widespread belief that a $100 note held a specific value equivalent to a certain amount of gold. However, the value of a banknote today is intrinsically linked to the value of other banknotes in circulation, which is also known as a currency peg. If the gold standard had never been abandoned, would the US dollar have maintained its dominance in today's market? Join us as we explore the evolution of gold standards to the prevailing dominance of the dollar in the global monetary system. Number 1. Monetary heritage. Gold standard. Gold predates the dollar. The gold standard was a monetary system in which a country's currency was directly tied to the value of gold. It was first implemented by the UK in 1821, and later adopted by Germany, France, the United States, and many other countries in the 1870s. Under this system, the prices of gold were fixed, and people are able to exchange gold for paper money at a fixed rate only. Central banks would be able to increase the supply of money by buying more gold and issuing more paper money when the demand rises, or reduce its supply by selling gold when demand decreases instead. In 1914, many countries abandoned the gold standard during World War I to support the defense operations financially. After the war, debates among the countries arose to reintroduce the gold standard. An irreversible inheritance. The gold standard was indeed successful until the Great Depression occurred, which weakened its effectiveness. After World War I, countries like the UK, France, Germany and more have tried to reinstate the gold standard, but economic challenges and political instability hindered their efforts. In the US, economic difficulties and bank runs between 1900 and 1932 led to the establishment of the Federal Reserve, which issued notes to address cash demands but had limited impact. By 1933, the gold standard was considered unsustainable due to its inability to meet the growing cash demands. The Fed faced constraints in printing more money and lowering interest rates due to devaluation and gold supply reduction. This was exacerbated by gold investors selling overseas, making it accessible to only specific entities. As a result, gold was removed from circulation as a peg of value. Number 2. The emergence of a new order. During the early 1940s, World War II had a profound impact on the emergence of the US dollar's dominance and the introduction of the Bretton Woods system. During the war, some countries, including the United Kingdom, used their gold reserves to purchase military supplies and equipment from the US. This increased the gold reserves of the United States, as it received gold in exchange for these goods and services. As a result, the US emerged as a major economic and military power during the war, and confidence in the stability of the US dollar grew due to the main gold reserve. The war also propelled US industrial production to expand its control over global trade and established it as a leading creditor nation. Meanwhile, major powerhouses like UK, France, and Germany experienced significant economic hardships. Their currencies faced devaluation and loss of confidence, creating an opportunity for the US dollar to establish itself as a more stable and reliable currency. As a result, World War II underscored the need for a new international monetary system to promote economic stability and facilitate post-war reconstruction. Number 3. New World Order. Bretton Woods System. Enter the Bretton Woods Agreement of 1944. The agreement accord brought together 44 countries, including the United States, Japan, France, and others, at the Mount Washington Hotel. Their shared goal was to establish an effective foreign exchange system, prevent competitive currency devaluations, and foster international economic growth. One of the key features of the agreement was pegging, which meant that countries would fix the exchange rate of their currency to the US dollar. In turn, the US dollar was pegged to gold at a fixed rate of $35 per ounce. Under the system, all participating countries agreed to fix the exchange rate of their respective currencies to the US dollar, with only a 1% deviation allowed. The rise of the US dollar in global trade. The success of the Bretton Woods system relied on the involvement of the International Monetary Fund and the International Bank for Reconstruction and Development, which was later renamed as the World Bank. Countries embraced the US dollar due to its economic and military strength, abundant gold reserves, and reliable reputation. By pegging their currencies to the US dollar, stability was ensured, promoting global trade and investment. The collapse. The collapse of the Bretton Woods system was influenced by various factors, including the gold drain phenomenon, which signified that the gold reserves at the time were continuously depleting. During the 1960s, foreign governments, concerned about the US balance of payment deficits, started exchanging their US dollars for gold as a way to preserve their wealth. Notably, France amassed a significant amount of gold reserves valued at approximately $3 billion, which prompted other countries to follow suit. This massive demand for gold depleted the US gold reserves. As a result, in 1971, the US made the decision to suspend the convertibility of the US dollar to gold, marking the end of the Bretton Woods system. In short, many countries prefer gold as a store of value over fiat currency due to concerns regarding inflation and the long-term preservation of wealth. Number 4. De facto, dollar standard. Following the collapse of the Bretton Woods system, the US dollar emerged as the dominant currency in the international monetary system. Other countries, lacking viable alternatives, began holding US dollars as reserves and international trade. The dollar's dominance stemmed from its stable value, the strength of the US economy, and the appeal of US government debt, like treasury bonds, as secure investments. Known as the de facto dollar standard, this arrangement emerged without a fixed exchange rate system. In 2019, 61% of all foreign bank reserves were denominated in dollars. In addition, the Society for Worldwide Interbank Financial Telecommunications, better known as SWIFT, was established in 1973 had played a significant role in maintaining the continued dominance of the US dollar in international transactions. According to reports, the US dollar is the most used currency on the SWIFT payment system, accounting for 41.7% of payments, closely followed by the euro. Everything we've learned today deepens our understanding of the monetary system. As investors, let's reflect on the following statements. True or false? The dominance of the US dollar in the global market is expected to continue. True or false? There are no alternatives to the US dollar as a global reserve currency. Share your thoughts in the comments below.